Hello, everybody. Welcome back to another episode of The Market Close. We are here Friday, May 17th, 3:46 p.m. Because I am late by 1 minute, everyone is making up conspiracy theories of what I was doing. You guys know what I was doing? You guys know what I was doing? All these comments in the chat. He's sleeping, thinking I take naps in the middle of the day. I was washing the dishes, okay? I was washing the dishes so that when my mom comes home, there's not dirty dishes in the sink. Okay, that's what I was doing for all of those that were so concerned about. I think I should just schedule the stream. You know what? I'm gonna start scheduling at 3:46 or 3:47. Everyone's gonna be so pissed off for those extra 2 minutes, dude. I would be pissed off. I would be pissed off if a YouTuber scheduled it for 2 minutes ahead of where it's usually just for fun. Yeah, I'm not gonna do that. You guys are gonna be pissed off. But I was doing the fucking dishes. Anyway, I'm here, and although I was doing the dishes, while I was doing the dishes, I was listening to a clip that I think is very relevant right now that we should all take a listen to, which is Bank of America and why they upgraded Robinhood. Let's get into this clip. Now, we have a lot to talk about. Bitcoin's doing well. Robinhood, where is Robinhood at right now? Robinhood, $20.19. The interesting thing about Robinhood is that we were struggling at $20 pretty much all day at like 1980, 1974, 1999, 20, 1992. I think we tested 20 like 6 or 7 times, probably more than that. Now we got 12 minutes into the market close, and it looks like we might end up getting a little bit above 20 as we close on the day. So here's a clip from Bank of America, why they upgraded Robinhood. We got to talk about that. We got to talk about Bitcoin. I have an Openai scandal that a lot of you probably haven't heard about. We got to get into that. The Openai Reddit news, have some updates on that. Also have updates on GameStop and AMC and what's going on with those companies. Faraday Future, some analysis there I want to give. Faraday Future right now, last time I looked at it, it was... yeah. Oh, wow. It's down 33%. Wow. Just turned negative. It was still green when I looked at it. Okay. So let's do the Robinhood clip and then we'll get into Faraday and everything going on in the rest of the world. Now, this clip is really good because he's not just talking about Robinhood. He's talking about the entire macroeconomic landscape for the next couple of years. So I think this is a really good one. Let's take a look at this and then we'll keep going from there. Thank you, everybody, for being here. We're on the market close. Here we go.
Upgrading Robinhood to a buy, raising the price target to 24. The analyst behind that call joins us right here at Post 9, Bank of America's Craig Siegenthaler, the #1 ranked analyst in Institutional Investors All-America Research Survey. Craig, great to have you here.
Thank you guys for having me.
Rising retail engagement is one of the main reasons why you double upgraded this stock. What are you seeing? People think of the latest meme craze, right? But actually, this engagement has been rising for months now.
Yeah, it's much bigger than that.
Yeah.
And so if you focus on the metrics, you're seeing accelerating organic growth. They had 44% organic growth in the first quarter. You're seeing more margin loan usage. That's the most profitable part of their balance sheet. And of course, you're seeing a lot more trading activity. It's up like 60% year on year. Some of that is crypto. Some of that is stocks and options. But we think this is early innings of a multi-year period of rising retail engagement. And Robinhood is one of the best ways to play that.
Why multi-year? I mean, are we going to see a multi-year? Is a market call part of this call?
It actually is because Robinhood is a great bull market
This part is really important.
stock. We were an underperform action Robinhood through the bear market when clients go dark, they're less engaged. Now, the B of A economists, which isn't me, but our econ team, they're looking for a rate cut in December and then another one. So it's not coming as fast as we wanted, but if the Fed can cut rates, it'll supply the markets with liquidity, and this should be good for volumes. It should be good for the stock market. So that's what I am betting on. Right. Bull markets are normally 7 years, not 1 year.
Yeah, there's a lot of talk about we're early. If we're really in one, it's still early days at 500 days or whatever it is. Would it have implications for pricing? Would you see a reversal of this years-long trend of disinflation in financial services in general?
Well, most products in Robinhood are free.
That's what I mean.
So where they're going to go. And so in Europe and other places, things can change, but you trade for free because they're selling their orders to market makers. So the business isn't vertically integrated. You have an online broker, you have a market maker doing different roles. But in the US, you get a great deal. You have this online app where you can do a lot of things for free or low cost. This is why I think there's a 30-year secular shift from millennials, Gen Z, Gen X's. Our kids are going to interact through their iPhone. They don't want to waste the time to drive to a brick and mortar branch to talk to an advisor and pay lots of money. They want to do it cheaply, efficiently on their iPhone.
So the companion trade must be Virtu.
The only market.
So that was the core part of his thesis and what he said. And I thought that clip was so interesting for a variety of reasons. So first of all, this is the #1 institutional analyst at Bank of America. They got the big dogs at Bank of America working on this one. It seems like they've been observing Robinhood for a long time. Again, they had $14 underperform since the IPO. They really haven't been fans of the business because the market cycle was towards the downside. Now, Bank of America and their equity research team, I think they have like 5,200 on the S&P by the end of the year, maybe 5,400. They're bullish on this market. They believe the market has room to run, which means if the market has room to run, the question becomes what are the winners while the market is running that haven't really exploded yet, haven't ran with it. And their argument is Robinhood is case. He goes on further in that video to say that the average Robinhood deposit or assets under custody for an individual client is $4,000. And the average of Schwab and Interactive Brokers, which are other Interactive Brokers, one of the other companies that Bank of America is bullish on, it's like $130,000. So there's about a decade for clients to build up assets under custody under Robinhood. And their argument is that there is a wealth transfer that's happening. That's an incredibly important part of the business as more people start to make more money. Forget getting money from your parents and then putting it into Robinhood, but making more money yourself and putting that into the application. All of that points to the bull case on Robinhood. So a double upgrade. I also did some research today. Not easy to get. It's not easy to find a double upgrade on a stock, a buy and a price target increase. Bank of America did that today, and it seems like they're pretty damn bullish on what's going on in the world of Robinhood. And so nice to see him talk about that. Also nice to see him talk about the retail activity on the platform being a catalyst organically. So he said it's not just meme stocks or crypto, but rather it's the organic flywheel that Robinhood has created along with credit cards and the gold ecosystem that they mentioned, which means they've been observing Robinhood silently, Bank of America that is, probably for the past 6 months, seeing what they've been able to do. And now today they were finally ready to say, all right, this company is ready for prime time. Let's upgrade them for the day. $20 on Robinhood, man. If we close above 20, it would be exciting. If we even close at like 1980 or 1970, I would be pretty damn happy given we were stuck at 17 for a long time. So let's see. We do have after hours and we'll see how the stock performs then. But it does seem like momentum is shifting on the company and we'll see where it continues to go from there as well. Palantir, let's take a look at Palantir as well. Palantir is 21.75. It was up at 22 at one point today, 22.15, then fell to 21.74. I think the street is relatively bored of Palantir, and it makes sense. I actually think this is a perfect accumulation time between now and the end of the summer because getting into Q3, Q4, when Robinhood's government business tends to heat up and a lot of commercial deals are signed back then in the Q4. They're probably also going to raise a lot of guidance because that's when they get the majority of their deals. I would say that's when we see a bit more momentum for Palantir. So Palantir here at 21.75, I don't think it's necessarily going to pop up to 25 any day, anytime soon. The catalysts aren't really there. They had a great earnings. Stock's been upgraded. Now the market's kind of just like, all right, Palantir, show me when you can show me. If we get a rate cut before September, which it's kind of possible, but I don't think it's going to happen. That probably will help Palantir. But at this point, I think the macro is irrelevant for Palantir. Palantir just needs to show they can keep growing. And if that's the case, then the market will eventually reward them. Wow. All right. So let's get into the meme stocks. Faraday Future under $1. Oh my goodness. Folks, we are watching this collapse in front of our eyes. I did tweet earlier in the day when it was at $3.10, or I missed tweeting when it was at 310, but I saw that it hit 310, and I tweeted when it was at like 185-ish, which was still incredible. It was still up like 12% for the day. But at one point on the market open, we saw this thing up a lot more than that. A lot more than that. It was up like 150% or something. So now there's some exit liquidity that's going on. It was at 277 in the morning, struggling to maintain 250, but it was above 250. Then it went to 310. Now you're seeing 1.2 billion shares of volume start to hit to the downside, down 43% in what is basically, I think, 30 minutes. It hit 389. Sorry. It hit 389. So that was the top, not 310. And the reason this is happening, in my opinion, is because no one wants to hold this shit over the weekend. Definitely not a lot of traders. And so we're seeing the decline of Faraday Future. Did you buy into Faraday Future? I did not. I'm honest about that. I didn't buy into any of the meme stocks. The FOMO is real. I'm not going to lie. The FOMO is there. But I mean, at the end of the day, you just don't know when you're in, when you're out. And the problem is this is like a roller coaster on the downside, because as soon as you feel everyone's rushing for the exit, it's kind of like a bank run. Your ass starts rushing for the exit, right? And like, it's very difficult to then have conviction in what are you having conviction in, right? Like there's nothing to have conviction in. It's just like a lotto ticket at that point. It's just a game. And once everyone starts leaving, you're like, all right, I'm going to leave as well. And that just creates more downside momentum on the stock. GameStop is $21.99. GameStop's down 20% on the day. Again, if you missed the news in the morning, GameStop filed for a mixed shelf offering of 45 million shares, which means they can dilute shareholders by 45 million shares. That's not good for GameStop shareholders. And they missed revenue projections by 31% year over year. They gave like preliminary projections this morning. That's also not good for the fundamentals of the business. AMC as well, down 5.3%. Now, our boy Dave Portnoy, I don't think he sold, which means if he didn't sell, from my understanding, he is now down 24%, a little bit more than that, on his $1 million play. And based on some clips I saw of him this morning, I don't think he sold. He also said he wasn't going to sell. By the way, Andrew Tate is bag holding. You got to see this thing, dude. This was the funniest thing I saw today. Let me pull up Andrew Tate's tweet. This was hilarious, dude. So again, Dave Portnoy is down. Andrew Tate, he tweets this like long message about peasants aren't very effective because they have an easily exploitable weakness. Peasants need money. And then he just goes on, they will sell. Selling is certain. They will sell if the prices go up. They will sell if the price stays stagnant. I mean, it's the most hilarious thing in the world, dude. He's just talking about how you have a peasant mindset if you sell these stocks. He got in at about $35, if I'm not wrong, because he bought it on the Monday pump that morning. And I think he was up for a bit, right, when it went to 60, but it didn't stay there for a while. And now's the question of, is he holding or is he going to be a peasant and sell? Granted, I don't think Andrew Tate necessarily needs the money, so he probably can hold, but no one wants to be a bag holder, and he's already holding a bag, so he has to justify the holding of the bag. And it's hilarious, dude, because the guy was grifting from the beginning just to get people into, he was trying to get people's attention by saying he's the savior of the matrix with the meme stocks. It's like, no. And that's not happening. And now that the stocks are down, if he played it as a gamble, I wouldn't care, right? Like, it is what it is. But the way you're framing it is like, this is the savior to the problem with the financial system. It's like, no, it's not, dude. It's a fun little game, but it's not going to collapse the entire infrastructure of the financial system. It's also barely short, dude. This thing was 150% short 3 years ago. Now it's only 24. Like, it's a normal stock that has a high short float. It's not like egregiously short, which means I never even understood the thesis for why people thought there's a massive squeeze that could potentially happen. So we'll see what happens with GameStop. I actually wanted it to keep going up. I think it's good for Robinhood, good for momentum, and it's just fun to cover, but it does not look like the apes are in. Granted, I don't think the story's done. I think the story still has room left to play, but at least for today, it's not going the way the GameStop bulls wanted it to go. Now, Bitcoin, BTC, almost at 67,000. We got a minute until the market closes. 66,949. Bitcoin has had an exceptional day. I think the ETF inflows are going to be pretty good given the momentum that we're seeing on GameStop. And if those ETF inflows are good for a third day in a row, it's been like 4 weeks. If we would have 3 positive days of net inflows, particularly from Grayscale, also having net inflows, that's going to be a great day. Also, guys, in about 15, 20 minutes, I'm going to call Steve. I already I made sure he's free, so he'll join the channel. It seems like every Friday he gets to join at the end of the show. He just put out a new article on Palantir, so we talk about that. Bitcoin right here is 67,000, so he'll join in just a little bit, and we'll continue to talk to him. All right, here we go. Market close. It is Friday. Thank you, everybody, for being here today. We'll talk about MicroStrategy as well. Friday, May 17th, 4 p.m. The stock market is now closed. Looking at Robinhood, $20.08 on the close. Man, a close above 20 for Robinhood. That's awesome. That's incredible. There you go. Close at 20.08. We still have after hours. It could go down after hours, but I mean, look at that, dude. 12% up on the day. The street wanted the stock and they bought it today. $20. Now it's green after hours, $20.09. Faraday future is up 9% after hours. It is down 38% of the day. So now it's above $1 after hours. You're seeing a green candle right there, up 10% after hours. Palantir, 2176 on the day. NVIDIA, not the best day for NVIDIA, but it's above 900. I think if you're an NVIDIA shareholder, you can't really complain about being 950, 970. It's at 924, above $900. That's pretty damn good. So NVIDIA right here, down 2% on the day. Green Wave Technologies, wow. This thing, hold on. This thing was way higher than what I'm looking at right now. This thing, yeah, it got to 29 cents. So this thing is only up 4% on the day. After hours, it's up 6%. But at one point, it was up 85%. It was from 15 to, it was at 30 cents today. So great. So Greenwave fell while Faraday fell. Crown Electric also, wow. Crown Electric. Remember this one in the morning? Remember this one? This thing was, how much was this in the morning? Yeah, this thing was 60 cents. Now it's 17 cents. After hours, it's up 8%, but it fell 30% since the morning when we looked at it. So basically, after the market opened, I really didn't look at these meme stocks all day. They fell. Even FJ. Okay, this thing actually, this thing had a good day, up 222%. This was like a Chinese real estate apartment rental platform. So we got Robinhood $20.05 after hours. Some of the meme stocks were not able to maintain their gain. Crown Electric down. Greenwave only up 4% on the day. SoFi, Kathy Wood had a talk. I'll have some stuff to say about that with some of the SoFi representatives. I watched a little bit about that, so we'll talk about that later. SoFi 728 up 2.25% on the day. Reddit had a phenomenal day, up 10% on the day. And then Greenwave up 4%. Crown Electric down 30% on the day. Shopify 58.53. Enphase 114. TJ just made $40,000 on covered calls expiring today at a $120 strike. So shout out to TJ. He made a good 40 grand off those covered calls today. And then MicroStrategy here, 1584, up 10% on the day as well. And that's because Bitcoin did good. Namir said you sold at 25 cents. Which one are you talking about, Namir? Are you talking about Greenwave? I know Meet Kevin got into that one. So Meet Kevin, actually, it was funny what happened with Meet Kevin today. He made like 100 grand off of one of the meme stocks. Greenwave, yeah. But then he lost 50 grand on a Tesla short, which is just hilarious, dude. He made 127,000 on Greenwave calls, 0-day expiration, and then lost 50 grand on a Tesla short. Like if you just didn't short Tesla, you just let Tesla be Tesla, you know, like just let it do its thing. Yeah, he wouldn't have this. He wouldn't have it. He still made 76 grand on the day. It's incredible. But you know, Tesla short did not end up working out for him. Nvidia is next Wednesday. Oh boy, that's going to be a big one. That is correct. Nvidia is next Wednesday. Okay. Let's talk about this Openai scandal because you guys are probably going to get a kick out of this. I saw this today and I just could not believe that this was happening. It doesn't change my opinion on Openai in terms of like the value proposition of them. I still think they're probably going to be worth probably close to $1 trillion, dude. Like Openai is not messing around. They are the company that is out there to win. And so I don't think anything changes for them, but this was very interesting to see what I saw today. All right, here we go. So Openai, here's one of their executive head of machine learnings for their head of alignment, super alignment lead, and executive at Openai, Jan Leakey. I think we talked about him yesterday saying he quit, but all he said was, I quit. And we're like, okay, he quit. It kind of felt fishy to me, but he quit, right? Now, this is what he says. I joined because I thought, this is what he said this at 11:57 a.m. today. I joined because I thought Openai would be the best place in the world to do this research. However, I have been disagreeing with Openai leadership about the company's core priorities for quite some time until we finally reached a breaking point. I believe much more of our bandwidth should be spent on getting ready for the next generations of models on security monitoring, preparedness, safety, adversarial robustness, super alignment, confidentiality, societal impact, and related topics. Basically, we should care about safety if AGI is going to be a thing, like Sam Altman wants it to be. These problems are quite hard to get right, and I'm concerned we aren't on a trajectory to get there. Elon, by the way, the guy that funded OpenAI, explicitly has said that this shit is really hard to do, and he didn't trust Google to be in charge of it, which is why he even funded, I think, $40 million in 2016 to start OpenAI in the first place. Over the past few months, my team has been sailing against the wind. Sometimes we were struggling from compute, and it was getting harder and harder to get this crucial research done. A TechCrunch article came out today saying that Jan Leakey, tried to get Sam Altman to give them critical compute resources, and Sam Altman basically said, you're not allowed to have this much compute. And as a result of that, he's leaving. Building smarter than human machines is an inherently dangerous endeavor. OpenAI is shouldering an enormous responsibility on behalf of all of humanity. But over the past year, safety culture and processes have taken a backseat to shiny products. We are long overdue in getting incredibly serious about the implications of AGI. We must prioritize preparing for them at the best we can. Only then can we ensure AGI benefits all of humanity. And then he basically says, hey guys, to all the OpenAI employees, don't mess this up. Like, this is really important. Now, as June says in the chat, he can probably get a new job in 2 seconds. 1,000%. He probably had a new job lined up before he quit. The question is, when you're that elite in the tech ecosystem, I don't think it's about a job anymore. It's about actually having a purpose and a meaningful effect on the world. And for him to leave and I'm sure he has some decent equity, and that equity is going to be worth a lot of money one day for OpenAI. For him to leave and say, I don't want to philosophically be a part of the way OpenAI is operating, it says something about OpenAI. And maybe we're reading too much into it. Tesla right here ends the day up 1.5%. And maybe he's wrong and Sam Altman actually knows what's going on. Or maybe, and this is a string of Ilya, one of the co-founders of OpenAI, left as well. And so it just leads you to believe, dude, if everyone's leaving the company, I mean, think of Sham Sankar leaving Palantir. That's basically Ilya leaving OpenAI. I mean, you would think, what the hell is going on? Did him and Alex Karp get into a fight? Does he not agree with the, strategy of the business? Like, what is happening here? And I don't know. Maybe it affects OpenAI's valuation. Maybe it doesn't. But right now, it does seem like there is a little bit of a concern around what is going on in regards to safety when it comes to OpenAI. So one thing I wanted to mention, Robinhood, $20.05 after hours. SoFi, $7.28. Greenwave, up about 8% as well. FJ, that thing's still up 222%. It's down 10% after hours. GameStop up 1% after hours. AMC up 1%. Bitcoin, 66,929. And then Faraday Future is up 20% after hours after falling 37% on the day. So there you go. That is a scandal in regards to OpenAI. Broccoli Bob says, are there hookers involved in the scandal? I don't think so. I would imagine it's possible, but that's not in my knowledge of knowing. Faf Allah, I'm sorry if I'm saying your name wrong, says NVIDIA is a good play before earnings, ? Honestly, I have no clue. I have zero clue if NVIDIA is a good play before earnings. We'll actually ask Steve when I call him in a second. I think NVIDIA is going to be a great play for the rest of the year, the next couple of years. But before earnings, I don't know, dude. I mean, before earnings is going to be, it's going to be. Now, granted, I think NVIDIA is going to do fine. I think NVIDIA is going to do very fine. They're going to crush their numbers. I think a lot of things have been indications that they're going to crush their numbers, and we've seen that all over the past couple of months. But I don't know. Like, what if it's up 85% year to date? There just might be an argument that the market wants to chill out a little bit. Granted, given the S&Ps at all-time highs, I don't know if the market necessarily wants to chill out. One thing is, it is important to understand about NVIDIA's chart is that people tend to forget NVIDIA. If we look at them over the past year, NVIDIA was flat at basically 400 or 450 to 500 for. Let's go. I want to see over the past. Let's do past 5 years. Yeah, here we go. So NVIDIA right here from May 2023, when it was at 360, all the way until January 2024, it hovered between 400 to 490. So you've got basically, call it 8 months of consolidation right there. And then we had the breakout. I don't think it's that crazy to say this thing consolidates from 900 to maybe 950 for the next few months and then breaks out. Now, granted, if the earnings are that explosive and the guidance is that explosive, maybe the breakout is coming sooner. And now the story is more obvious right here during this $400 range. The story was not as obvious as it is right now, which is why anyone who bought during that deserves the double that they're sitting on, more than double that they're sitting on. But it's going to be interesting to see how the market ultimately decides the price action should go. The catalysts are on NVIDIA's side. The growth, you could argue, is still monumental and the valuation still isn't crazy. But that guidance is going to be pretty much everything for how NVIDIA decides to go further. So there we go. That's what we got. Emmanuel says, so the scandal is no different than what Elon has been doing with his employee, especially the supercharging team. Well, Elon getting rid of the supercharging team, I think, is a different pivot in the company, right? Elon wants to be a little bit more on the robotaxi side, not really caring that much about volumes and deliveries, but more about AI. It doesn't really have to do about safety. So yes, there's definitely scandals in Tesla in terms of how Elon's reorganizing the company, but it's not about the fundamental safety of AI. If anything, they're way more optimized on AI safety with FSD. But to me, it's more OpenAI. It's more about like, hey, their employees, their execs don't feel that AGI is going in the right direction, at least. Okay, let's call Steve. Let's have him join the show. Thank you, everybody, for being here as well. And we'll get Steve updates on what's going on in this market. He also wrote an article on Seeking Alpha for Palantir that I'll put in the chat in just a bit.
Hello.
Steve Fiorillo, you are with me on my channel with 800 people on the Market Close. Thank you for being here.
I got some beef.
I'm Indian, so I don't eat beef.
No, I got some beef with you.
I actually do eat beef, by the way. What's your beef?
Don't put that into the world about Sean leaving. And I know you didn't say it. But let's not even put that out there because we don't want that to happen.
Sham's not leaving, dude.
I know he's not
leaving.
Did
you see the podcast I did with him?
Let's leave. Of course I did. use a different example next time. Let's not even put that in the universe.
Okay, so the example I'll use next time is that's like imagine if Steve didn't call into the show, guys.
Yeah, don't use that also because nobody cares about that or not. But like, let's just not put that in the universe because Sham's awesome.
Well, in that interview, if you saw, did you see the part where he said he goes skiing with carp?
Dude, these guys are incredible.
These guys are amazing, man. All right, so speaking of Palantir, let's get started with that. First of all, how are you doing, Steve? How's your day been?
Going well. Yourself?
It's going well. Were you work from home today, or no?
I had to take the day off. I still worked, but I had to take the day off.
You took the day off. Why'd you take the day off?
I had some things I had to take care of, but I still attended 5 meetings today.
Did the side chick? She wanted attention today?
No.
That wasn't a very convincing no, by the way. I'm just saying.
It wasn't a very good joke either.
Okay. All right. So we're sharing this article right now. We'll start with Palantir. I got a lot of questions I want to ask you, but Palantir, the title of your article, the sell-off is a long-term opportunity for a clear winner in AI. I'm going to put it in the chat. Please, everyone, check it out. Click on it. Let's get this thing trending. First question for you. Why is the sell-off a long-term opportunity?
Me personally, I still believe more than ever, Palantir is going to have a Salesforce type arc. Can't prove it. I can't predict the future, but it certainly seems that they are a clear front runner in AI, and that AI is going to be the next vertical in computing, the way that cloud computing was and the way that SaaS models were. And I don't know that I don't like talking in definites, but it doesn't seem like there are many companies that can compete or catch up to where Palantir is or where they're going.
Okay, let's talk about the earnings. And I'm on the slide where you show customer count. What is getting you excited about the customer count? Some people are saying that they've done, 600 boot camps. They added 50 customers. That's about a 9% conversion rate. Maybe they're not growing fast enough. How are you thinking about customer count growth to top line revenue?
Well, I think that when people are saying that, they've never worked in a field where they've actually gone through an RFP process. Companies don't just attend a seminar or a 6-hour boot camp or a week-long boot camp and sign a contract. Some companies may, but that's probably not the norm. I mean, I've done quite a few RFPs with quite a few big companies. They take a while. And when you're talking about allocating these types of numbers to a contract, people are going to do their due diligence. And I don't put much stock in the negativity around this. We're seeing a clear increase in the trend about Palantir adding clients. And these are probably the same people that questioned if they could monetize commercial and if they could grow commercial. I mean, this slide clearly indicates that the commercial count is growing at a very fast pace and that they are clearly becoming the company that the largest companies in the world are looking to help them monetize their data and become more efficient.
Why do you think there was a sell-off?
People sell off for numerous reasons.
I know, but in your opinion, the earnings were so good. Why do you think the street said, we're not buying it right now?
I don't know. We ran into earnings and maybe people were expecting a huge blowout because of the contracts, because of the hype around it. That could be part of it, which is fine. Because you know what? I'll just buy more on the way down because I'm not looking for a 1 week or a 1 month gain. I'm looking for 5, 10, 15 years. So I welcome it.
Yeah, I agree. I think under 22 right now is a really awesome opportunity because everything okay, so let me ask you this question. Everything I saw in the earnings was a green flag, but the stock price didn't go up. So to me, I'm like, all right, even the analysts, all of them, besides Rishi, were like, yeah, this is a good earnings. Was there a red flag you saw that would make you a little hesitant to buy at this price?
No.
Wow.
I mean, let's think about this. When you purchase stock in a company, you're taking an equity position in the company. Even if you just buy one share, you are an equity owner. So you're a part owner in a business. There's really two main components. There's the underlying assets and then the cash flow. when you look at the actual underlying assets, there's no debt on the balance sheet. You're buying into a company, you're investing in a company that's got $3.8 billion in cash, no debt, no leverage. They're generating $40 million a quarter in interest. Rates certainly are not going to 2% anytime soon. And people want to say that that's a red flag. Well, more than 50% of their net income is being generated from the actual operating business.
Yep. People forget that.
That's not a red flag.
Yep.
They're just using their cash smart. And I certainly don't want to see buybacks right now. If they're going to do buybacks, I don't want it to be more than 10, 20 million a quarter. I'd rather them utilize some of the interest they're generating and buying back shares from that rather than doing a $500 million buyback or $1 billion buyback. The cash is better off right now on the balance sheet in treasuries, collecting that interest until rates go under 4 or 3.5%.
Yep.
But you're buying a fundamentally strong company. Like, this is what I don't understand. People want to say, people want to buy AMC and say, screw the man or do this or do that. AMC's got $4.5 billion in debt, and I don't see a way out unless they dilute shareholders to oblivion. I don't see how they can repay their maturities. But they don't want to give credit to a company that has no debt on the balance sheet, that's built a phenomenal business that all the big players are using. So you have the underlying fundamentals on the balance sheet, and then you have the actual operating business that is going to be approaching $3 billion in revenue. They're going to be approaching $800 to $1 billion in adjusted free cash flow, which I hate the adjusted number. We got to get them to stop using adjusted numbers. But this is a company that prints money, and they're only getting bigger. And you look at the contracts, this was the first time, you know this more than anybody, that the military chose a software company as a prime vendor.
It's a big fucking deal, dude. It's a big deal.
Big deal. And this is the beginning of AI warfare. We're not going backwards. That's what people seem to not understand. We're not going to regress in the technology.
Okay, Steve, I want to ask you about someone who bought Palantir yesterday, but I'm going to play a small clip for everybody. This is
You're talking about Druckenmiller?
I am talking about Druckenmiller. This is a small clip of Karp talking with Druckenmiller for everybody. You'll probably be able to hear it, and then I want to get your thoughts on it.
So one of the reasons I even wanted to do this is like, okay, we do event, people will show up, like make sure everyone.
So you brought a 69-year-old dinosaur in the interview?
Yeah. Well, you know, it's
12-year-olds don't get into that, you know.
Yeah. Well, you know, there's a but I don't, it's I do think there's like a lot we have to do on the culture to make up for the 2 years of being apart. But what makes a Palantirian is somebody that comes here sometimes for the wrong reasons and discovers, you know what, I realize that at any other institution in the world, so I am not going to have the kind of freedom and autonomy to actually get mission stuff done. And as frustrating as it can be to have to convince the colleague next to me, it's also because they're frustrated at me because I can say no. And then so that's the primary. It's somebody who also, of course, remuneration is really important. But I do think most people who come and stay here are really, really focused on what are you building, how are you building it, and what is the impact. And I think what we've proven at Palantir is if you're very focused on that, that often but doesn't always work out better than the people who are just focused on like trying to get rich tomorrow, who often don't get rich.
So true.
But yeah.
So that was Karp talking about why employees actually work at Palantir. Druckenmiller is back after trimming 71% of his NVIDIA stake. How do you feel about him being back in the company?
I mean, Druckenmiller barely misses.
Yeah. Yep.
He barely misses. I mean, it's hard to bet against Peter Thiel.
Yep.
It's hard to bet against Druckenmiller. I mean, it's just, and I think people dislike this company for the wrong reasons. And for me, I go through all the data with a fine-tooth comb, and I'm not seeing anything that makes me scared because I have a long-term horizon on this. And when you actually think about Oracle, as the latest big tech company to truly partner with Palantir in cloud and AI and selling the product across government and commercial verticals. I mean, show me the red flag. Everybody has partnered with Palantir. And once again, there are still only 3 companies that actually have IL6 accreditation. Palantir is one of them.
Yeah, and you know, he had NVIDIA. One quote he said for why he sold NVIDIA is that the marketplace now recognized what we recognized 2 years ago. I think he's getting into Palantir. Not a big position for him. It's still small, but I think he's getting into it because he thinks maybe the market doesn't recognize what Palantir can do the way they have with NVIDIA. And so it'll be curious on the next 13D if he adds. Because if he adds, that means he's back in town, and Palantir might be the next big stock that he's planning to go for.
Well, and let's remember, net dollar retention is 111%, but what's not included in that is the deals over the past 12 months.
Yeah. Yep.
So if you carry that forward and you keep extrapolating that out and you look at all the deals, if you go to that slide I put in with their deal book, this is a company that's getting more and more deals every quarter. If they can maintain that net dollar retention or increase it, sky's the limit for this company. And when you think about Amazon partnered with them in some capacity, IBM was the first big company to really partner with them. And they have, I hate giving bad numbers, I believe it's something like 10,000 consultants in their consulting business. I mean, if one of these companies really thought that they could compete with Palantir, they would try to compete with Palantir rather than partnering with them.
I agree.
I mean, you know the numbers. What do they have? 17% of all healthcare beds in the U.S.?
20% now, yeah.
20% now? I mean, it's...
And then the example Sham used in the podcast with me about nurses, I mean, it was just such a good example of him explaining why there's real value there.
And when you look at it from an organizational structure, and I can speak from this from experience, when you go through an implementation that your company becomes reliant on, it is so much more difficult to implement something else rather than going from the point of origin when you were looking for that piece of software.
Yeah.
I don't think people really understand how big businesses operate. And when you implement something of this scale and everybody is using it and you're getting results, you're not doing another RFP just for the hell of doing another RFP.
I agree. All right, we'll have Steve on later tonight as well on Palantir Weekly, 11 p.m. Eastern, so he'll flesh out his thoughts even more. Vince, Steve, and I will be on the weekly, and I think Matt will join us as well. Steve, got some other questions for you. Faraday Future, interesting stat I want to tell you about. Do you know this company?
Nope.
You don't know Faraday Future at all?
Nope.
Wow, interesting. I would think a intellectual investor like yourself would have an understanding of this company. So Faraday Future, if you bought calls expiring today on Monday for the 50-cent strike.
Is this the one that was up like 3,000% or some
crap? So let me finish. If you bought those calls for 50-cent strike, you would be up 14,000% 2 days later. This is a company that's up 4,000% in the past couple of days. It is a penny stock for an electric vehicle company. Volume for the past 3 days has been over 1 billion shares traded. I've never seen anything like this. I know you've been around longer, so you've been, you've seen some of these things happen.
I have 2 words. I got 2 words.
Okay.
Don't care.
But not even a little?
No.
Not even a little?
Because you could have never caught this unless you had information.
That's fair.
That's fair. This is an anomaly that people are going to be like, woulda, shoulda, coulda. They would have never invested in. Don't waste your time on it. I don't care. People made money on it. Great. I'm happy for them. Don't care. I'll tell you what I think you're going to think is crazy.
Okay.
I am starting to put a thesis in my mind about GameStop.
You know the crazy thing, dude. You just reminded me. Do you remember, Steve? Do you remember? I think you know where I'm going with this.
I don't know where you're going with this.
No. I think it was October. We went on the phone and you gave me a thesis for GameStop. Do you remember?
Yeah, based on it, because they actually have a strong balance sheet.
Because they have a strong balance sheet. Yes. And oh no, I remember exactly what happened. It was right before Dumb Money came out. And you thought, do you remember this? You thought the movie.
Yeah, because I thought that this would have happened in September when the money came out rather than now. Yes.
So the movie was not the catalyst at all. It was,
which is crazy when you think about it.
Yeah, well, the movie actually, I saw Vlad on an interview the other day, and someone asked him about the movie. The movie like failed at the box office, like it did horrible. And Vlad made
it wasn't good. I watched on Netflix. I had to speed through parts.
It was horrible. It was a horrible movie, but
it was not good.
Yeah, it was not. I was entertained because I care about this stuff, but for the average person, I don't think it told the story like as exciting as it could have. But Vlad even threw shade at them. He was like, "Yeah, there's a reason a lot of people didn't watch the movie." And I was like, "Oh, so he keeps up with the stats. He knew that the movie failed at the box offices as well."
So I'm going to give you a premise I'm still kind of fleshing out right now.
Okay.
But I think this whole Pokemon angle that they're going to do is going to save the company.
Okay, explain that because I don't really know what that means.
All right. So basically, they're operating in a dying business. Video games are digital, not physical. Their business around the secondary market for buying and selling used games, that's diminishing. It'll probably be done in the next 3 to 5 years if I had to guess. Because why drive to GameStop when you can just download it on your PlayStation or Xbox? There's just less of a reason. And for all the downloads, that's one less physical version that's in circulation to enter the used game program. So GameStop's operating a dying business. They got $1.2 billion in cash or so. They have $17 million in debt. Very clean balance sheet. They made money in their recent quarter, but they typically lose a couple $100 million a quarter. So they're burning cash, but the balance sheet is clean. I don't think people understand how big trading card games are. And this new endeavor that they're starting in 7 states, they are buying back, or they're buying PSA, which is a great.
Let me read from this article right here, and then you can continue. GameStop apparently doesn't want to buy cards, though. Employees across multiple states, they will only be buying cards that have already been graded by PSA at an 8, 9, or 10 with good condition, and yet GameStop won't accept the rarest cards valued at over 500. One employee tells The Verge this is an explicit collaboration, but that GameStop won't offer grading services in store.
Yeah, so I think they're doing it for a reason. So if I was Ryan Cohen, and I've been really thinking about this, what I would say is, okay, we got $1.2 billion on the balance sheet. Let's take $300 million and try to turn this into a different company. GameStop is in the best locations. They're in every main mall, and they're in strip malls that are anchored by CVS, some type of pharmacy, some type of supermarket, something like that. Trading game stores are off the beaten path. So there's probably a GameStop between the consumer and their local trading game store, LGS. I think that they are going to take $100 million or $150 million, something like that, and allocate it toward buying PSA, because PSA is the most renowned grading company, whether it's sports or trading cards.
Why does that save the company?
So here's how it's going to go. Do me a favor. Google and put it up on the stream so everybody can see my craziness. Google Pokemon regional tournaments. And look how many people, tens of thousands of people show up to these regional tournaments to play.
Dude, why are people playing a card game? Dude, there's one in New Jersey.
Dude, let me just tell you.
There's one in a public library.
The whole scene for the regional tournaments and the international tournaments is huge. And it's not just Pokemon, it's Magic the Gathering, Yu-Gi-Oh!, that kind of stuff. TCG business is absolutely huge, and it's only getting bigger.
Wait, what? So hold on. Who makes money off these tournaments?
So I don't know the exact dynamics on the tournaments. I don't play. I don't know much about it. I just invest and steal product because I understand the market of these products.
Okay.
But my premise for GameStop is they're going to allocate capital. They're going to buy PSA grade 8, 9, and 10s for under $500. And they're doing it at fair market value, which is great for the consumer or the end user because eBay charges 13.5% on a selling fee. So right there, you're already getting above market comps because there's no bid to eBay.
So I'm looking at a card on eBay right now that's worth $30,000 for a graded PSA Mint 9 Charizard.
It's probably like the 99 Chandeliers or something. But yeah.
So there's a real market for this shit.
You have no idea how big the market is. It's crazy. Sealed Pokemon product has outpaced the S&P 500, excluding the most current set because it normally takes about 4 to 6 years to mature. But the matured sets, each set has outpaced the S&P.
Steve, I'm looking at a card for Pikachu right now that's worth $198,000.
Is it the Illustrator card?
It's Pikachu 5 Prize Pack Series. And the hilarious part about this is you have to also pay $5 for shipping. Imagine paying a $200,000 and then paying $5 for shipping, dude.
All right, so let me get through the premise. So basically, they're going to buy these cards and they're going to have inventory. They're going to transform their stores and take the dead space from the video games, and they're going to sell these cards. And they want under $500 cards because they want kids to come in and spend 20, 30, 40 bucks to pick up 2 cards. The people that are going to go there are probably not buying a card for $1,000, $2,000. But they'll probably buy 2 or 3 slabs when they go there with their friends. They then open it up and have tournaments at the Gamestops. And then they go and they say, you know what? We're going to compete with everybody else. We're going to hold a GameStop International tournament. And then they're going to try to use their power and flex their muscles and become the biggest distributor of Pokemon cards in the U.S. and have the largest tournaments with the largest prizes. And they're going to basically put out of business the independent LCSs and take over the market because their current business model is dying.
So GameStop is going to be a seller of Pokemon, a buyer and seller of Pokemon cards is your argument?
I think it's going to become the only and the largest chain of trading card stores in the U.S.
Oh, like all their stores will transform into, that's not a craziest idea because I wouldn't know where to go if I wanted to like trade Pokemon cards. I mean, I'm sure there's dedicated stores to it, right?
Oh, there's a fair amount of them.
Okay, so then why is this idea unique then?
Like, I didn't say it was unique. I'm just saying that they're going to build a better flywheel than everybody else because of their locations. You don't have local trading card stores in malls. Mm-hmm. You don't necessarily have them in great locations. And there's probably a GameStop between most of the consumers and wherever they're currently buying their slabs from. And then they can go a step further and build out their own online marketplace on their website and charge less fees than eBay and steal a lot of eBay's customers. Because eBay is 13.5% for sellers. They could do 6% and completely undercut the market. Like, this is a Hail Mary, and I really need to look through the numbers and stuff. But if they do what I just said and then go a step further and go outside of PSA and start doing CGC, and I think they need to do CGC because then they can do the comic book angle also. And CGC they specialize in graded comic books and trading card game cards. I think that GameStop can completely transform their business model over the next 5 years. But I want to see a full plan from Ryan Cohen.
Well, they don't do an earnings call, so they don't talk to investors, so it's hard to get them on.
And that's a problem.
Yeah,
that's a problem. But GameStop could be something that completely gets out of the video game business at some point and becomes a full-blown trading card game store.
Now, in general, the valuation at 1,000 PE, I'm assuming you wouldn't be paying that for this new plan, even if they came out with that idea.
No, I think it's a crazy valuation.
Yeah, so just to confirm for people, you're not saying this is a bull thesis. You're saying this is one way.
I'm saying that if they want to save their business, it looks like that this is the route they're going, and they're going to test the waters with buying. And then when they acquire enough product, they're going to basically start transforming their stores and try to get a foothold in this market.
It's a very interesting thesis, Steve. And I forgot you recommended it, or not recommended, but you were thinking of GameStop a while ago. I did forget you did.
Yeah, but for a different reason.
For a different reason, yeah. But you've always had your eye on this. Okay. Someone asks Steve if he would recommend you to watch A Bronx Tale.
Whoever said that is iconic.
What is A Bronx Tale?
What is wrong with you?
No, seriously, it's a movie, right? Is it a good movie?
Yes, it's a freaking movie.
A Bronx Tale. Oh, I have to watch 36 Chambers of Shaolin because Sham said that's Carp's favorite movie. Have you seen that movie? Have you seen it?
Yeah, it's a martial arts movie.
Okay, so I have to watch. Oh, Robert De Niro is in this one. So which one should I watch first, Bronx Tale or 36 Chambers of Shaolin?
It depends what mood you're in. I mean, there's some really good martial art movies, but I mean, a Bronx Tale is just. You grew up in the Northeast, so I think you got to watch both.
Mr. Seymour Duck, thank you for the $5 super chat. He says Pokemon is the biggest media franchise in the world. Look at how much they make on merchandise.
Yeah, they're bigger than Disney, Star Wars, Marvel, anything. Way bigger.
Okay. Let's end it off here, Steve. S&P is at all-time highs. How are you feeling about that? What do you think is happening in the markets?
I mean, look, the bull case for the market is the same it's always been, with a couple of tweaks. If you're a long-term investor, don't get worried. I'm certainly not. And if the market retraces, you just get the S&P at a better number. I mean, at some point, they're going to cut rates. At some point, cost of capital is going to come down. When that happens, we know that businesses are more likely to borrow capital and expand. And when that occurs, money flows to the top, and the company's S&P 500 will probably have better earnings, drive the market higher.
I agree. I mean, there's a great chart by Tom Lee shared the other day that if you buy the S&P at the top, after 3 years, you're up 48% versus any other day, you're only up 40%. It's kind of like...
It doesn't matter. You can't time the markets. I don't care how good of a pattern reader you are. Nobody knows what's going to happen in the future. You're taking a guess based on whatever information you're looking at, but you're formulating your guess off of past information. If you look at a long-term annualized chart of the S&P, sure, there's some years that are down. Sometimes you get 3 down years, but ultimately over a long term, it goes up.
Yeah.
You either believe in the American economy and believe it's going to continue to expand, or you don't. I happen to think we're going to continue to expand and that the markets are going to continually go up. You're going to have periods where it retraces. You're going to have periods where it goes down. You may even have some down years the way that we did in 2022. But think about it. Amazon was down 40, 50% in 2022.
Yeah. Google hit a high today. Yeah.
Where's it now?
Would you would you buy Nvidia before earnings?
I don't know. That's such a tough question because you know how I feel about Nvidia. It's a great company. They've done what so many people couldn't do, but I really do believe that they're pulling so much forward. And at some point, these data centers that are upgrading all their stuff, they're going to need to monetize their investment and they're going to need to appreciate their assets. Same with Microsoft and all these other companies. And Microsoft, Amazon, Alphabet, they're all making their own silicon. They don't want to be as tangled with NVIDIA as they are. We saw Apple kick NVIDIA to the curb years ago, the same way they kicked Intel and AMD to the curb. So I don't know. I think, look, everything I'm saying is a guess and it's an opinion, but I would not be surprised if we see NVIDIA's revenue slow considerably over the next couple of years because all these places are buying all these chips. They're going to want to get the investment out of them.
Yeah.
I think the easy money's been made. Let's put it that way.
Yep.
I wouldn't be surprised if it doubles, but I also wouldn't be surprised if you only see 20% over the next 2 years.
All right, Steve. Thank you.
There's other investments that are more interesting to me. But I'm an oddball.
Like Palantir. Yeah.
Well, think about this. What was I telling you about Altria Group at 41?
Oh, where's that one right now?
Right?
Where's that? Yeah.
It's at 46.
That was, I mean, look, I know you're making money on the death of people's lungs, but still, it's great, right?
I'm just saying that Altria at 41 with a 9.5% dividend was inexpensive for the earnings that they produced.
No, I got to give you credit on this one, dude. This was, did you get it at 41 or like 38? You got it decently lower than it is now.
I mean, I've been buying all over the map, but I was buying at 41, 40, 50, and a little when it dipped right below 40.
And they have 9% dividend too, dude. That's like.
And,
that's not
and the
bad.
dividend's growing at about 4% a year also.
And then SLG 53
Yeah,
hit
you
57.
look at SLG. I told you guys. I said, listen, you don't look at the amount of people that are actually entering the buildings. Look at the occupancy rates on tenants and look at the subway data. I looked at the subway data from the comptroller report from New York State, and it showed that we were at about, I want to say it was like a 65 or 70% capacity, and pre-COVID levels was like 75% capacity. And we were right back in that sweet spot. And SL Green was trading at like 22.
Yeah.
You know, it's the same thing with Vornado. It just didn't make sense. I mean, being in New York City, I see all the people in the city. I mean,
You called this at
it just-
$19, by the way. I remember this was March 2023.
Yeah.
You told us about this one. Yeah.
yeah, it just didn't make sense. But I mean, I'll tell you, okay, AT&T, don't be surprised, not this year, don't be surprised in the next 2 or 3 years if this thing.
Oh, this thing is actually
It's
up. Hold
much-
on. It's at 17. I remember it at 12. Hold on. Yeah, it was
I
at
think it got to
$12.
like 14.50 or so.
It was at $12.76 July 2023.
Don't be surprised if AT&T is much higher. I think that people are starting, like I just did an article on them. I went through their entire freaking debt structure. This is a company, and granted, they have a lot of debt, but debt matters if it's not manageable, okay? When you actually look at their maturity schedule, they're generating $17 to $18 billion in free cash flow. They have more than enough firepower to eliminate all their maturities on an annualized basis going forward, pay the dividend. They're paying about $8 billion a year in dividends, and still eliminate future debt or buy back shares. And when they do that, they decrease interest payments and or decrease the amount of dividends they have to pay out because there's now less shares. Don't be surprised if they put themselves in a position where they start raising that dividend again. Their leverage ratio is around 3.6%. I'm sorry, 3.6x. So really not leveraged that much. I mean,
And their
I think
debt,
the
their debt
market's
is
wrong.
low interest debt, right?
It's low interest debt, but when you look at the maturity schedule, they have more than enough to pay it off every year. This is a company, it may take some time. This company is down so much. It's been a decade of lost growth, and I've been wrong on it. I've been bullish on AT&T for a long time because I thought that the market has been wrong. I still think the market's wrong. I'm not giving up on this one.
Okay. Adam says in the chat, what is your best growth play with a 6% plus dividend? Do you have any names? So I think he's talking about something like Altria or SLG where there's capital appreciation, but also a dividend.
Yeah, I mean, I don't know that you're going to get much. I mean, look, I think Altria under 50 doesn't necessarily make sense to me, and I think that SL Green is going to do well over the next couple of years. If you look at the historical,
It was at 80.
chart.
SLG was 80 at one point.
At one point, it was at 120.
Huh. Interesting. 2020 it was at $70. Yeah.
I mean,
Like
I
85.
don't think that it would be unreasonable for SLG to continue higher. I think that there's some interesting companies out there. I mean, look, Realty Income. I'm not scared of real estate the way some people are. And I think that is interesting here. I mean, there's some interesting
Also,
places.
you called
IBM.
IBM, TFC as well. You called TFC.
Yeah,
right?
Truist. I've been saying Truist for a while. But yeah, IBM is still very interesting after the recent dip. I mean, that's got 4% dividend.
What do you feel about Dell? Do you think that story is kind of fake? Dell is up 3% today. It was at 150 today.
Yeah, Dell and HP are interesting because,
Dude, Dell is
at some-
5x since 2022.
at some point you're going to have a super cycle, and people could argue we've already seen a super cycle with the pandemic and work from home, but you got two major catalysts, and the first one may surprise you. Windows 10 goes out of service October or September of 2025. I think it's October 2025. Year and a half away. from no more service.
Oh, wow.
That
I didn't
means
know that.
anybody with a Windows 10 computer is not going to get any more security updates, patches, or anything.
Wow.
You're going to see a very big upgrade cycle to computers that have Windows 11. That's the first thing. Second thing is I think the next round of chips that Intel and AMD make will be some type of AI chips, and that will probably create another cycle of upgrades. And HP and Dell are two of the biggest and most well-known manufacturers. I got to believe that they're going to do well.
What about Intel, Steve?
Intel is a dark horse that I like.
I like it too, but I agree. It's one of those where I'm not sure yet, right?
Look, I think we may be getting a gift with the latest retracement. I said it was still a good opportunity.
I think so too,
last
but
time we were here and it went to 50. I mean,
but it depends how hard it is to execute their foundry business in the United States.
yeah, it's a 5 or 10 year play. It's a 5 or 10 year play because you're not just buying it for the chips, because you got a lot of great companies making great products for chips. You also don't know if Qualcomm or companies like that are going to try taking over the computer market if we're ever going to move away from x86 architecture. But from a foundry standpoint, Intel is the only one that can pull this off in the U.S. I mean, Taiwan Semi is trying to expand into the U.S., I believe. But I think that Intel is going to be a very interesting play because they'll be making chips for their competitors and profiting from it.
I agree.
But I think it's an interesting time to be in the market. And, you know, don't fight the Fed, right? Don't fight the Fed on the way up. Don't fight the Fed on the way down. You got to believe we're closer to a cut than an increase. If you're listening to what the Fed is saying and you're looking at the labor market and the CPI reports. And look, if oil keeps going down and it stays under 80, you're going to see that in the next couple of CPI reports.
That and shelter, they're coming down, man. And if they're coming now, let's see what happens. But if they come down, yeah, maybe 3 rate cuts. I mean, I don't think it's going to happen. I think we'll be lucky if we get 1, but you never know.
I don't think he cuts in June. I think it's a July cut if the next CPI report is good.
I think it's a September cut because the next CPI is not going to.
No.
It's not going to have a 2-handle. It's not going to have a 2-handle.
If you don't cut in July, there is a very slim chance he's going to cut in September, no matter what the data is, because the last thing that they want to look is favorable toward a presidential campaign. Can't have the first rate cut be in September. It looks like they are not impartial, and they're trying everything they possibly can to look impartial.
It's a fair point.
If they don't cut in July, I don't think we get a cut until December, or if the November meeting is after the election. I don't know when the November meeting is, but if it doesn't happen in July, I don't think we get one to the end of the year. But if we get one in July, you could still get 3 cuts this year because then they already started cutting. And the best part is there's no August meeting. So you get 60 days or so to see how the markets react to it, how the labor markets react, how inflation reacts to it. And then you can take it down by another 25 bips in September.
You get to test the waters essentially with it. Yeah, that's a good point.
July is the perfect month to do it because you have 2 months to test the waters without having to make another decision.
Right.
I mean, what are you looking at these days?
In terms of stocks?
Yeah, you always have some interesting ideas.
Well, I mean, I'm pretty concentrated with Palantir and Robinhood, but Robinhood passed $20 today, so that was good to see.
Nice.
Bank of America gave them an upgrade, so they passed $20. Yeah, I mean, really, it's been
who is saying Citigroup?
I don't think anyone in the chat is saying it. Citigroup?
Oh, no. I was saying Citigroup for the longest time.
Oh, is Citigroup doing good? Let me see.
I was telling all you guys Citigroup.
Oh, you're right. Hold on. It was at $37 in October. Now it's at 64. You find these boring stocks and try to make money off them.
Dude, you have a Seeking Alpha account, go look at my rating history on freaking Citigroup. I was writing articles about that when it was in the high 30s and low 40s.
And what was your argument?
that tangible book value was like 80 and book value was 92, and it was trading at a huge discount.
But why was it trading at a huge discount? Was it the Silicon Valley?
I don't know. The market hates Citigroup for some reason. It hasn't made sense. But I still think that there's room for that to run. But I think the easy money's been made.
Dude, I'm looking at your Seeking Alpha. I'm sharing it right now. You have 940 articles.
I can't believe I've written that many articles.
I hate writing so much. Like, I love talking. So, I mean, I don't know if I've done 940 streams, but I've done a lot of streams. But you've written a lot of articles. Wow. There's a lot of stuff, Steve. You've kind of know about the markets.
I mean, know something about something. I don't know.
You know something about something. All right, guys, we're gonna end it here.
You only give me an idea. Pitch me something.
No, dude, I don't have any ideas. I'm not looking into anything new. I have my 2 bets this year, and we'll see how those plays out. But
I wouldn't say Palantir is a bet. I mean,
Palantir is correct. I mean, so to me, I'm looking at a lot of stock. I mean, Intel was the one I was interested in that I wanted to get your thoughts on. I also thought
I like it.
I like it as well. I'm just afraid of it being a value trap, but it went down to this range and shot up after a couple of years in 2023. But yeah, I mean, there's not a lot of crazy stocks I'm looking at that the level of like I wrote today on Twitter, I understand Robinhood's balance sheet more than I understand my own hopes and dreams at this point. Like, this has been the year for me to solidify a ton of money into one thing and get it right. And then I'll worry about, diversifying over the next coming years. So for me, it's really about, I understand, I think a decent amount about the macro because I keep up with that. But in terms of getting super deep on, like, I'm not like you. You can go deep on like 10 stocks and write 4,000 word articles on all of them and just be like a gangster and do that. I can't do that yet. Like,
I got 2 hot takes for you.
Okay.
Out of the Mag 7, let's rephrase that. Out of the big 5, let's take Tesla and NVIDIA out of it. Out of the big 5, I think you're going to see the most movement in Alphabet from here to the end of the year.
Yeah. I agree.
And don't bet against Apple. Stop betting against Apple.
I wouldn't bet against Apple. I do think their growth is a bit more engineered, and that's not a bad thing, but I agree with you. I see your point. Now, look, if they make Siri, I mean, I don't know if you saw the Openai demos with the voice thing. Those demos,
I told you Siri's going to become an AI assistant.
But those demos, dude, the way she was being like, I think the guy was like, "Hey, can you be a little sarcastic?" And she was like, she legitimately became sarcastic. I was like, "Holy crap!" I
didn't watch any of it.
Okay, I'm gonna send you the video. But if that becomes Siri, first of all, I'm gonna tell her every day, "Hey, can you just can you be a little seductive?" And so I'm just gonna have a seductive AI talk to me all day. But the point is, if it can be that good, maybe that is the reason to upgrade to the iPhone. I mean, maybe.
It's not just about the iPhone. It's not about upgrade cycles.
That's the only thesis, Steve. It's not about the Vision Pro. We're not doing this again. It's not about that stupid goggle.
It's the future of computing. Okay.
It's not the future of computing, dude. It's not happening. I don't think it's happening.
All right. I got a little wager I'm going to make with you.
Okay.
In the next 5 years, you're going to have the Vision Pro become a pair of sunglasses. And it is going to scan somebody's face. It is going to bring up all their social media profiles. And it is going to tell you what their interests are before you even meet them. That happens within the next 5 years. And we can figure out what we'll bet on that if you want to take the bet.
I will bet against you on that. Correct. I will bet against you.
Okay. I mean, you already have Google where you can search the internet for an image. There's no reason why you can't have a camera scan somebody's face and it pull up their social media profile.
I think you're undermining a lot of risk people would have with doing that, but okay.
Oh yeah, because we're really worried about the risk with any of this stuff.
I mean, there is an argument for why I don't want someone looking at me and scanning my entire. I mean, I don't know. That's an interesting. I'm happy
you walk through New York City, you get scanned by freaking 10 cameras a block.
Steve, if you think people are going to walk around with funny looking glasses, go up to people.
I didn't say funny looking.
Okay, the beautiful Ray-Bans. I'll give you the best thing you want, and then go to someone, press a button or say a voice command, and then get all their socials and their fucking blood type in front of their face. I don't think that's going to be the case. I don't think that's going to happen. But
if you're wearing a pair of glasses and you have the ability to get information about people while you're having a conversation or before you have a conversation, that's an asset.
No, dude, that's weird. That's fucking. I'd rather look them up on like Instagram in private than fucking stare at their face and see their like followers. Like, it's weird, bro. It's some Black Mirror shit that I don't think is. And also, dude, the amount of engineering in 5 years, that's their timeline to get this without having an external battery and all that stuff. Like, I don't see that happening anytime soon. Maybe a decade, maybe. But also, I don't even know if they're producing another version of this thing. From all the reports we've seen, that they don't have the demand.
Well, if they don't, then my theory is a little screwed. But I think they will. I think there's a lot of educational applications.
Have you seen the photos of the Apple stores with no one there at the Vision Pro section? Like, you should go to an Apple store this weekend.
Nobody's paying $3,500 for this. It needs to be $799.
Well, then Apple did $30 billion of spend on R&D over the last 10 years. That came out today.
Apple wastes money like it's water. Think about the amount of money they waste on the electric car. Got news for them. They were never going to produce it. They shouldn't have done it. They should have bought Warner Brothers Discovery or something useful.
Or Peloton, in my opinion.
No, why Peloton?
Because at least, I mean, if you put a Peloton in every Apple store, I feel like they sell way more Pelotons than, and they integrate with Apple Music, Apple Health. Like, I think there's a play there, to be honest.
I mean, look, at this point, I would have rather than buy Peloton than go down the crazy road of producing an electric car, because at least that way they still have a monetizable asset that maybe they can turn around, or at least have it be a loss leader and add it to their services category. But Apple needs to do something, and I still think services is the way to go, and I think they can expand it. And I think that they are one of the only companies that has the ability to purchase sports teams, to purchase content, build out Apple TV, and then have that be proprietary to Vision Pro.
Okay, let me ask you one last question before you leave, Steve. I got a good one for you because I think you like this name, but earnings, it was sold off. Maybe there's an opportunity, maybe not. Starbucks.
Oh, I love it.
So what did you think about the earnings?
I'm still going through it. Look, if you go to Starbucks, and I've said this for the longest time, you don't drink other coffee. What they do to their beans, my understanding, is they sear them some way so it tastes very distinctive through the cream of the coffee.
And they charge you an arm and a leg for those beans, by the way.
But hold on a second. When I go into Starbucks, okay, all I see is young people. All I see in the morning, young people. And I'm not talking people in their 20s. I'm talking teenagers on their way to school. It is crazy. You're building lifelong customers that have the brand recognition in their hand. Mothers and fathers bringing their kids.
Yeah, that's fine, Steve. That's fine. But the earnings showed that people aren't shopping there as much as before.
It's 1 quarter. It's 1 quarter.
Okay, I'm not saying. I'm just saying that's what the earnings showed.
Yeah, it's 1 quarter. I'm not worried about it.
Okay. All right. Thank you, Steve.
I think long term it's going to be fine.
All right, he'll be on Palantir Weekly tonight, 11 p.m. Make sure you don't sleep, Steve. You'll be awake. Get some coffee from Starbucks, and
I interact with everybody that I possibly can on Seeking Alpha. So if you like the article, if you have questions, leave a comment and I will answer.
Yeah, let me put the article again one more time in the chat. I'll also put the tweet, guys. Please make sure to retweet it if you're on Twitter. And
that'd be great. Thank you.
And check out the article. Steve works really hard on this content, so please make sure to click on it, check it out. And we'll talk more about it tonight on Palantir Weekly. Thank you, Steve. I appreciate it. We were on for 50 minutes, dude. That was awesome. Thank you so much.
All right. I'll talk to you later.
Talk to you later.
All right. Bye.
Bye. All right, guys. That's it from me. Thank you, everybody, for being here. This was a fun day, fun week in the world of the stock market. We'll be back Monday, 8:45 a.m. on the Market Open. I will have an interview on Sunday, so I'll be live on Sunday. Probably will post a couple clips on Saturday. And Palantir Weekly tonight at 11 p.m. And we'll keep discussing everything in the world of Palantir. That's it. I love it. Love you guys. Thank you for being here. Have a great Friday, great weekend if I don't see you till Monday morning. And we'll see you next time. Bye, everyone. Have a good one. Good night.